Good morning. This is Ron Brown. It's August 27th, 2022, Saturday morning, and I'm doing this about 8 a.m. Anyway, I'm going to do a short weekend report, and let's go ahead and take a look at my standard risk disclaimer. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. And if you're not using HGSI, you should. Just go to highgrowthstock.com and you will find the order link, or you can just copy this down and paste this into a browser. I'm going to try to keep this video pretty short. First, I'm going to go into my designer, and I'm using my full installation of HGSI, and I'm going to market user groups. Go to the Major Markets Plus. I'll click through to that, and then I'm going to go up here to my top-down process scans and click on Major Markets. I'm on the wrong folder, sorry. Click on the first one, Major Markets. So these are the major markets from yesterday that I have in my folder. I'll sort on raw combo. Notice the brutality of yesterday's move after Powell's statement. He really didn't give us specifics about rate increases, but it was enough to set off a panic in the market. But one thing that still really stands out to me, and I mention it every day in the NASDAQ chart that I post, is the lack of volume. Now, all of these indexes don't have volume here, but you can see that these numbers are well below the 90-day moving average. Now, let's go to my chart that I look at every day and bring it up. Just click on this, go to Market Charts. It's chart number 1. And you can see that this was setting up very nicely for a move to the upside until the Powell announcement. It was holding steady, and then it just went straight down. But notice the volume compared to the 90-day moving average volume. There just was not a lot of volume yesterday, but there was a lot of pain, as you can see by this black candle. Now, this black candle, these are all positive VPA flags, and it looked like it was going to make a run towards the high again until yesterday, the announcement. And now here is a new VPA flag, reached new recent higher and higher volume, but failed to hold, which is very bearish. And then there is a negative pocket pivot, or a volume pocket pivot. It's just the reverse of the positive volume pocket pivots. And if I hit my alternate I key, bring this information up, I'll scroll down to the bottom. Do that again. You can see the advancers to decliners, not that bad on this, slightly over 2 to 1. But these are just the NASDAQ stocks. That just doesn't seem right. Okay, I think maybe I had the wrong day. Here we go. This makes more sense. You have to be really careful when you click on here. You have to click on the last day. Now this is more like it. I couldn't believe it was a 2 to 1 day. Advancers 399, decliners 2774, and new highs 26, new lows 79. The ARMS index is essentially worthless in my opinion, but because it's actually showing buying pressure below it's below the zero line. Now that defies logic. So let's take a look over here at this part of the chart. I'll bring up in a arrow. I want to get rid of this. And once again, I have to make sure I'm clicking on the correct bar. Okay, there's the VPA information. The sentiment obviously is bearish now, but look at this. The volume's less than average. Spread is wide. Close is down. The best fit VPA long-term trend is still up, but the medium and short are down. Now we're back, obviously, into a a bear market because we're down 25% from the 52-week high and only up 14.9% from the low. This changed dramatically, obviously, yesterday. And from here, we were getting a nice rally, and then we got hit. But once again, the volume is light. Okay, let's see. Bongo Weekly, relative strength indicator is still strong. The trend never did go up on the fan. The percentage volume to the 90-day moving average volume is still 13.3% below average, and you can clearly see that here. Okay. Now, I do want to look at some other charts here. Go to chart number 2. There's a 1A and a 2. This is the chart number 2, new highs versus new lows. And if you bring this window up, you can see that we're not at extremes by any measure, but the new lows surpassed the new highs. It was working its way up. The new highs were above the new lows until yesterday. And once again, look at the low volume. And then go to chart number 3. And this is the the advanced decline line. You can see the market was moving up nicely. Came down here. Tried to rally. So this is a new low. You can look at it that way. Then it rallied down here. Lower high, lower low, and then a lower low down here. And then we were starting to work our way up here with a higher high from this low. But this would have had to continue on, and now it's back down here in this area. The red line is a 10-day moving average, which it broke up at this point. But you can see starting here, here's a higher low, higher high, higher low, higher high. It was moving up nicely, but now it's reverse course, and if it doesn't hold in this area, this is going to be a new lower low. I've brought the designer up, and I'm going to move from the major markets plus index down here to the HCSI broad market indices. I'm going to bring all these up. I'll click through, and the view that I'm using here is under my top-down scorecard views for HCSI analysis, and I am moving down to, this is the third folder down, and I'm moving down to view number 3 because this shows me advancing issues versus declining issues. And I'm sorted on raw combo, and look at these numbers. The all NASDAQ was a little over 8-to-1 negative, but if you go down here to the bottom, you can see that all of these indexes, none of them had a single stock that was up. If we go to the industries, there were 2 advancers and 171 decliners out of the indexes, and there must have been 1 unchanged. No, there was 0 unchanged, so one of the indexes didn't even have a $5 stock in it. So it just calculates stocks that, or indexes have to have a minimum $5 stock in it to be calculated. But you can see how overwhelmingly negative this market was on advancing issues versus declining issues. I'm going to go into my S&P 500 since that is widely followed, and I'm going to go into my HCSI index charts, and I'm not going to look at all of these. I'm going to look at the advanced decline line on the S&P 500. Advancers minus decliners minus 490. Percentage 98% were up, 1%. I'm sorry, 98% negative, 1% up. It's just unbelievable how negative it was yesterday. And this is the advanced decline line, which is calculated by HCSI in the S&P 500. So not only do you have it for the NASDAQ and the NYSE, you can calculate or look at this information in any HCSI index. Now, let's take a look at this one. This is a percentage of stocks above their 20, 30, 50, and 200-day moving averages. And if you hit your alternate I key, it brings this information up. If you're clicked on the last day, it'll show you the percentage above the 20, 30, 50, and 200-day. Now back here, when the market was really moving up, you can see the percentage above the 20 was 87%. And as it started descending, that number goes down. But we got back here at this point, the day before yesterday, the percent was 54.49%, but after yesterday, down to 16.77%. So you can see what happened. During a strong market, this is going to be above the moving average line, of course, and you're going to generally have either a flat line or a series of higher highs and higher lows. And it was doing really well until it started rolling over here. I like to look at this chart. Another one I like to look at is this one that I put together several years ago when Ian and I were together, and it shows indicators. If it's 5 to 1, either positive or negative, it's going to have a green, dark green if it's 5 to 1, or a dark red if it's 5 to 1 to the downside. And the same thing for the advancing versus declining volume. Force index 13 and 2, both of these columns, and then the volume point of control. You can see every one of these turned negative yesterday, which is a sell signal, and that follows a day when it was a buy signal because they were all green. It just shows you how the mood of the market changed in one day after after Powell's announcement. If you look over here in this box, 5 up, 495 down. Just a devastating day yesterday for people that got in long, and everything reversed. The SOX was the most dramatic change yesterday. The prior day it was looking good. Let's see, where is the SOX here? Here it is right here. Not a single stock up, but look at the prior day. A buy signal. And then a reversal. We had an effort to rise, and then we have an effort to fall, followed by an effort to fall. And the volume did pick up on this compared to the prior day, but there was a lot of optimism the prior day, and it just totally got wiped out yesterday. NVIDIA reported the day before. This isn't a chart I would normally use, but since I'm here, there was a buy signal on it. High volume up bar indicates strength, and then a total reversal yesterday. It took out the prior day's low on heavier volume. So completely whipsawed for those who went long on Thursday. I'm going to get out of this chart. I'm going to go just back to close some of these. Go down to these contextual charts. I'm going to use number 1A, the one that I just put in. It should be in the add-on, and you can see how dramatic this stock looks with this chart. Pocket pivot, and just totally wiped out yesterday. Interestingly enough, the volume point of control did not turn green on any of these days. So based upon that formula, the bulls were not back in control of it, although there were 3 green candles in a row. These didn't close near the high, though. This one did, but it wasn't enough to get the volume point of control positive. Okay, I want to end this video on something a little more positive. First of all, for those of you in the Insider Club, I'm going to show you how to get to my PDF. I've said this several times, but people don't seem to remember, just log in to the member services, go to the Insider Club, download the PDF, and this is from last week. This will be changed for this week. And if you're using the user smart groups that I've been creating, you should come in here, click on this link to the PDF file if you haven't installed this one, and if you install the Tom Williams box stock scans. To install it, you just click on this, save this as an add-on. Just like updating your add-ons, and then go to the preferences menu. I cleaned the screen up so I could show this a little bit. Go to the preference menu and just click on install add-ons. Locate that Tom Williams add-on and you can open it and it will install. Anyway, I'm going to close with this. I'm going to go into the designer, and the reason I want you to do this, Tom Williams box stock scans, I'm going to just give you a few stocks to look at if you're looking at the long side. Just go to Tom Williams, close higher. Tom Williams is the guy who founded Trade Guider Software, which uses VSA, and he passed away, I believe, in 2016, but he was an innovator in this field, and I like what he did. Now, these charts they all closed up from the prior day. So here's a list of stocks that you can look at, and let's just go to the daily prospecting view, click on number 1, and you can see that all of these stocks were up for the day yesterday. And if I flip through these, you can see there was some strength. This is a renewable. It's been basing. Effort to rise yesterday. It closed off the high, but look at that volume here. Just a few stocks to look at quickly. There's some decent looking charts in here, you have to admit. Steel company, paper company, China Petroleum. There's some setups in here. I don't know how the market's going to hold up, but these are a few to go through, and it's just a quick list. You can see that they were all up. If I go down to the last one, it was up slightly too. It's had a sharp pullback, but buyers have been coming in. Now I'm going to leave it at that, and I don't predict the market, obviously. I just observe. But it was pretty brutal on Friday, very brutal, in fact. But the volume was kind of light. Let's see what happens next week. I'm not so sure there's going to be a huge follow through to the downside. It's not a good idea to get too extremely bearish and get too opinionated. Just let the market tell you what it's going to do. But this list of stocks here, if you do this one every day, that close higher, and these are box stocks by box stocks. These are stocks that have consistent earnings growth. So let's just bring this one up. I'll go back up to the top one. Actually, let's go to Drago, bring up the fundamental window. And you can see that this earnings growth has been really spectacular here, and the revenue growth too. Had a little hiccup here, but it's been moving up. So if you're going to look to the long side, look at this PE. I know a lot of people don't even look at PEs anymore, but 3.44%. If you're looking for upside stocks, this is a good list because there are earnings, and these stocks all went up the prior day, from this day to this day. So it went from, it was green, 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 all of these. They're moving up. Well, actually, this one's not green, but it closed higher than the prior day. Tom Williams always said one down day, one red bar really doesn't matter. And that's what happened here. Just this one's setting up nicely. Let's look at another one here. higher than the prior day. This is all it looks for, stocks that were higher than the prior day, and on Friday there weren't a lot of stocks that were higher than the prior day. So we're getting stocks that showed strength and strong stocks that have strong, consistent earnings growth. Thanks for listening.